Welcome to episode 35 of FBI Retired Case File Review with Jerry Williams. I'm a retired agent writing crime fiction inspired by actual FBI cases. In this episode, we get to speak to retired agent Keith Kelly, who served with the FBI for 27 years. Keith, a certified public accountant, CPA, worked a variety of assignments during his career, including being a member of the New York Division SWAT Team, extensive experience as an undercover agent, using his accounting skills to follow the money trail of international drug cases and other criminal enterprises involved in distribution and racketeering, and of course, with his CPA skills, specializing in complex financial and money laundering investigations. Keith's most high-profile assignment, however, was as the case agent of the Bernard Madoff Ponzi scheme, a 21-person interagency investigation into the largest security fraud case in history. Keith's work resulted in the identification, seizure, and forfeiture of more than $8 billion in assets, along with the conviction of Bernard Madoff, who received a 150-year jail sentence. Now, if I'm allowed to have a favorite podcast episode, this will be one of my favorite ones. I am absolutely fascinated by greed, fraud, and corruption. That's what I worked most of my bureau career, economic crime. I have always been curious about what someone has to say to themselves, what they could possibly say to themselves to make it okay to steal another person's life savings. Bernard Madoff was unbelievable. He took money from everyone he knew. Keith Kelly provides an amazing look behind the scenes of the investigation of the world's biggest rip-off artist. But before we get to that interview, I want to give a shout out to my listeners in Malaysia. I would call you out by name, but I can't find the email that you sent me. But you know who you are, and the fact that you're listening in Malaysia is just too cool. Thank you for listening. The other thing I want to tell you is to remind you about the documentary series that's coming on this Sunday. It's about the JonBenet Ramsey case. It's on CBS. It's going to be on right after 60 Minutes this Sunday. It's going to be on again Monday, September 19th, and again the following Sunday, September 25th. Retired agent Jim Fitzgerald, who was on the podcast, episode 3, and retired agent Jim Clemente, who will be on the podcast in the near future, are featured on the show. Basically, what the team did was to rebuild the Ramsey house in order to recreate the crime scene. And they go through every aspect of the original investigation. What was right, what was wrong, what was missed, what was overlooked. It should be a pretty fascinating show. And the last thing I want to talk to you about is, and you know what it is, it's my novel, Pay to Play. It will be released this Tuesday, September 20th, but you can go to Amazon.com right now and pre-order either the Kindle edition or the trade paperback. I'm not embarrassed to let you know that I want to earn the title of best-selling author with this launch. So I'm asking for your support. Like I said last week, it won't be a pity purchase. Pay to Play is represented by Curtis Brown, one of the oldest and most established literary agencies in the country, more than 100 years old. So the book is good. So if you want to say thank you for the great podcast episodes I've brought to you, 35 episodes and counting, then please consider buying my novel, Pay to Play, about corruption in the Philadelphia strip club industry. My novel will be my crime fiction recommendation this week, so I'll tell you more about the book after the interview. Oh, I almost forgot. If you're listening to this episode before Friday, September 23rd, I want to invite you to my book launch party. So if you live anywhere near Philadelphia or will be visiting the area, the book launch party will be held at Sugar House Casino's brand new event center on Friday, the 23rd from 5 to 7. What better place to have a book launch party about a book about greed and money than at a casino? More information about the book launch party is on my Facebook page, Jerry Williams Author, and also on my website under the My Novel tab. I'd love to meet you in person. Now here's the show. Hi, everyone. I want to welcome my guest, Keith Kelly. Hi, Keith.
Hi, Jerry.
Most of my career, I worked economic crime, Ponzi schemes, advance fee schemes, business-to-business telemarketing fraud. And so to have the opportunity to speak with the case agent of the biggest economic fraud case in the Bureau's history, Bernard Madoff, is just absolutely exciting for me. So thank you.
Oh, my pleasure.
But before we get into that, I want to learn a little bit more about you. I want the listeners to know a little bit more about you. So could you tell me when you joined the FBI and some of the offices and some of the assignments that you had in addition to working the Madoff case?
Yeah, I joined in 1983. There was a agent who came to my university to speak to the Accounting Honor Society and said they were looking for accountants, and I thought that sounded a lot more exciting than going into public accounting. So I joined in 1983. My first office was Omaha, where I spent a couple of years, virtually all types of cases as a new agent, and then was transferred to New York in 1986 and did drug work, did some public corruption, did some national security work. Then took my OP over to Phoenix in 2001 and worked gang cases. Biggest case there was the Mexican Mafia case. And then I went undercover full-time for about 3 years and transferred back to New York, which took me to the Madoff case in 2008, where I ended up retiring.
You just went through a number of violations, and it sounds like the majority of them had nothing to do with accounting. So definitely when you joined, your accounting helped you, I'm sure, in many areas, but it also took you places that I guess anybody else who would have been in your college accounting classes just never even touched on.
Oh, yeah, absolutely. And it was good. I mean, back then, I think there were only about 125 CPAs in the Bureau when I joined, and now, it's probably close to 1,000. So the Bureau has changed. But certainly the accounting skills and stuff really helped me when I was doing drug cases to follow the money trail, doing some structuring cases, again, following the money and the assets, and forfeiture. So even though I wasn't working typical accounting cases most of my career, I still used the skill set my entire 27 years.
Well, I hope we have some time at the end to talk a little bit more about some of those, those drug cases that you worked and used those accounting skills. But let's get into the Madoff case right away, because I know this is going to be, a long interview, and I have so many questions for you. So the first question is, when did you first learn about the scheme? When were you first brought into this case?
We got a text message from our supervisor saying there's a $64 billion fraud, I think he might have said Ponzi scheme, and that we're all on standby for it. And at first I thought it was a typo. I thought he meant 64 million. What had happened was Madoff's two sons had gone to the Southern District of New York and basically told them what their father had told them, that his whole scheme was a Ponzi scheme, none of it was real, and that he was essentially bankrupt, and he was looking at huge redemptions in the next few days that he wouldn't be able to meet. So a couple agents from my squad ended up arresting Madoff. He essentially confessed on the spot, and then that's kind of when we started the case.
All right. Well, it sounds very noble of him to confess on the spot, but it sounds like he would have been caught anyway at that point because he wasn't able to, meet the financial demands.
Yeah, absolutely. I mean, there's one school of thought which says, he told the sons to go in and turn them in as a way for them to save face and look like they were cooperating. There's another school of thought which said that they knew to one degree or another that the setup was fraudulent in nature, maybe not necessarily a Ponzi scheme, But most importantly, whether he came in or not, it was about to be found out because he had about $250 million in the bank, and he was looking at $1.5 billion in redemptions due the following week. And that number was just going to increase because no money was coming in. It was all outbound, so it was doomed at that point.
Before we get into your investigation, can you just give us an overview of what you knew about Madoff and his financial businesses when you first initiated this case?
Very little, quite honestly. Once we made the arrest, we saw the news reports. We heard that he was the non-executive chairman of NASDAQ, for instance, and started learning more about him, that he was very instrumental in the market-making business, basically facilitating the buy and sell of shares on the market, basically acting as the middleman between buyer and seller, and he would take the spread. That would be his profit. So he ran that business, and then he also had this side business, this investment advisory business, as he called it, and that's where the Ponzi scheme was run out of. But the two businesses actually were interdependent upon each other. The market-making side of the business, the so-called legitimate side of the business, was being funded by the Ponzi scheme, but the Ponzi scheme was also given an air of legitimacy because he was supposedly running this legitimate Wall Street firm, which was losing money left and right for years.
So when you say that the initial part was somewhat legitimate, do you qualify it because it was what we call, from the fruit of the poison tree? I mean, the money going into that was illegal money?
Somewhat. When he started the firm in the early 60s, that part of it was legitimate. But at the same time, he also started taking investors' money and supposedly investing it, and from almost the beginning, that was never legitimate. So he did build out this business. I don't know at what point it became unsustainable or unprofitable, where the money from the Ponzi scheme was supporting it, but it was also supporting their lifestyle, both Bernie's, his brothers, the two sons. They were being paid very large salaries out of the legitimate business, or so-called legitimate business. So I don't know when it turned unsustainable. For instance, in his proffer, Madoff, his initial proffer to us, Madoff said the business was worth $1 billion. Well, the receiver brings in some Lazard Freeze to evaluate the worth of the business, and they come in and they're very excited, and initial reviews are, yeah, maybe it's worth $1 billion. Well, within a couple of days, that number gets knocked down to 400 million, 200 million, and in a matter of time, and it didn't take them very long, they said, this thing's worthless.
Wow.
And they ended up selling it for like maybe $1 million, and the people that assumed it, I think they lasted 6-9 months, and they were out of business. They just couldn't make it work.
All right, so you get this text message from your boss about this scheme. Take us from the very beginning as you try to figure out what's going on.
Well, after he's in custody and he makes a proffer, there's so many people in this room. I've never been in a proffer with some of the people from the SEC, from CIPIC, U.S. Attorney's Office, IRS. It was quite the show. About halfway through, I realized this guy's just lying. He's totally self-serving, and we're getting very little from him. And at that time, we hadn't even really secured his office. So I told my boss, look, you guys can finish up here. I'm going up to his office and seeing what we have. The receiver at that time had secured the office.
In what sense? Just locking it up or something like that?
Yeah, restricting access and disabling fax machines and shredders and things like that. Before I went up there, I asked Madoff, how many boxes are we talking about? And he said, probably 50. And I was like, well, okay, that's pretty manageable. And I told my boss, hey, we're going to have to do a consensual search. And he's talking about 50 boxes. I said, I think that's a little low. By the time we get up there, we're talking 3,000 boxes spread out and hundreds of computers and computer storage medium. And I told my boss after a while, I said, you know what, this is ridiculous. We should just establish this as the crime scene and work out of it from here. It's just too voluminous, and it wasn't even counting a warehouse in Queens that had over 10,000 boxes of documents and more computer medium. So that was really the best decision I ever made in my life, quite honestly, and it was very self-serving that it would be a lot easier to work out of there and kind of maintain the evidence in its original locations, and so we could reconstruct it. And that's what we ultimately did. We used the office space as our offsite, and just went through document by document, trying to see what was there.
So you're saying we? How many people are on this team from the FBI?
Initially, there were 2 of us. that expanded to 4 until I went and complained to the ADIC at the time, who was a friend of mine. I said, we need help. And he was good enough to get us bodies there almost immediately. So we were probably up to like 12 or 15 at one point.
Can we take a little break and also talk about what other agencies are involved in the criminal case, and if you could explain about the civil matter that's also being investigated at the same time?
Sure. On top of this, you have SIPC, which is the Securities and Investors Protection Corp, I think is its name. They're heavily vested in this because they've got to make good on all these losses, on a lot of these losses. You have a bankruptcy receiver who's been appointed, who's in charge of recovering as many funds as you can. You have the SEC, who has jurisdiction on the civil side, who is investigating. And then there's the IRS, there's the Labor Department, because pension funds were involved. So everybody wanted their hand in this. So you had to coordinate that, and that becomes difficult because you're dealing with federal grand jury material. The SEC is not entitled to see that, so you have to wall that information off from them. So you can't commingle that. And then when you have the IRS, you have the sensitivity of tax information, so you've got to get special approval to look at that. So there are a lot of moving parts here. And then at the same time, you had a lot of the former employees, some of whom were ultimately charged, some of whom were not culpable at all. They're being retained by the receiver to assist them in reconstructing records and trying to determine who's owed what, where did the money go, things like that.
So that's pretty fascinating, because those are potentially subjects that have access to your crime scene.
Yeah, a lot of them were. And what we did was they didn't have unfettered access at all. They were basically kept in a conference room, almost like a jury, just sitting there reading the newspapers, and they would be asked to come out and speak to us and ask for questions and everything. And some of those people were ultimately charged and convicted.
Very interesting. So who's in charge of this? I mean, is there a lead agency? I mean, who's making decisions about... Mm-hmm.
We were the lead agency, and Erwin Picard, who was the receiver, was very good about deferring to us and giving priority to us whenever we would need it. So he was very helpful with that, helpful with resources and things like that. I had a good relationship with them and the forensic accounting team from FTI who they hired. I've never seen so many accountants in my life. I mean, they brought them in from everywhere. There are 50, 60 accountants just going through reconstructing records, and we didn't have that type of capability in the Bureau. And quite honestly, we didn't even know what we had, because here, unlike other frauds where generally you'll have low-level people coming in and talking and giving up the scheme, here you have the top guy who is in custody but is saying he acted alone, which we know isn't true. And you've just got thousands of records going back to the 70s, and you're trying to A, locate all the assets and the money flows, B, the actual nature of the fraud and how it was conducted, and then who was involved in helping sustain the fraud.
When did this start? When did he actively begin operating a Ponzi scheme?
In the 60s. We were able to prove back to the 70s through documents and testimony for certain through the mid-70s. That's as far back as the documents would go. But we pretty much think it was in the 60s at some point. So you're talking of at least a 30, possibly a 40-year fraud.
And how does one get away with running a Ponzi scheme for 30 years? I mean, my understanding, I had a Ponzi scheme, a $350 million Ponzi scheme that I worked in Philly. And, it fell apart within 3 or 4 years because he just could not get enough people to invest in order to pay the people going out. How was Madoff able to do that?
Yeah, it really is fascinating because you're right. Mathematically speaking, a Ponzi scheme eventually has to collapse upon itself. And he had a couple of near-death experiences. One was in 1992, where this one firm, Avellino and Bienes, was a major feeder fund to Bernie. Well, they get shut down by the SEC. And this really scares Madoff because he's afraid that the SEC is, once they're done looking at Avellino and Bienes, they're going to come and look at his records. So Madoff does a very smart thing, and he pays off all the Avellino and Bienes investors. And that almost bankrupts him, but it gets the SEC off his back, and in fact makes Madoff the savior because it's like, oh, look, no one lost money. Bernie came to the rescue. This is great. No harm, no foul. And it really exhausted his capital at that point. But what he ended up doing after that was taking in all the Avellino and Bienes investors himself rather than indirectly through them, and then he was paying off Avellino and Bienes on the side, and that got his capital back up. So all these people, basically Bernie gave them their money, and they put it right back with Madoff.
Wow.
So that was the first near-death experience.
And that's very smart because they trusted him. Now they really trusted him,
Yeah, and they were with him to the bitter end. And they had special notations, like you could always tell an A and B client because their account numbers would start with ZB, and you knew, or ZA, that they were Avellino and Bienes investors. So they were with Bernie from the 80s, either indirectly, or ultimately directly. And those investors, they had a special setup. For them, that's where the so-called split strike strategy was set up. And that's what Frank DiPascali oversaw, was the strict split strike strategy. The other investors, the big individual investors, were overseen by Annette Bongiorno. And basically, Annette would just go and backdate stuff and give a certain date, a certain return. And those investors were Norman Levy, Carl Shapiro, Stanley Chase, and Jeffrey Pickauer. And those were huge investors who were with Madoff for many, many years. And these guys would get really large returns, but they were also a big source of capital to sustain Bernie.
Now, the investors, I take it, had no idea.
No, these investors, they do. Jeff Pickauer, well, he dies before we can prosecute him, but his estate ends up writing a check to us for $7.3 billion, which was a huge forfeiture amount.
And what is that based on?
Well, basically, from we were able to take records back to the late 70s and showing his ill-gotten gains since the late 70s were over $7 billion. And it really was just overwhelming. He was getting 45% returns in a matter of 3 months based on the backdating of trades. And, his estate ended up settling for, like I said, $7 billion, which is that's almost half of the loss suffered by the entire investor class.
All right, so this is more than just clawback. Could you explain to the listeners what clawback is and the difference between, asking, early investors to return money as opposed to what happened with this investor and the ridiculous or outrageous return on his investment that he received?
Right. So I'm not an attorney, but the way I understand it is clawback is more a civil remedy, and that is what the receiver is in charge of, is basically going back to see, and I believe it's governed by state law, and in this case it would be New York State, which allows you to go back and claw back 6 years worth of profits from anybody who made money in the scheme. And the idea is, if someone made money in a Ponzi scheme, you take that money back, you put it in a pool, and you distribute it pro rata among the people that lost. So essentially, the winners become neutral, and then whatever money's left over, you give to the losers to the extent of their losses. Now, being a criminal agency, we didn't have to worry about clawback. We were seeking forfeiture. So all we had to do was prove that the money was illicitly obtained, and we could seek forfeiture on it. So there are two different remedies. Even though the money is eventually turned over to the victims, it's just a different process legally.
Interesting. All right. So you mentioned earlier that Madoff was arrested, but we've all seen those photos of him walking down the street with all of the media following him. So what happened with that?
Well, quite honestly, we were shocked that Judge Chin allowed him out on bail because he certainly had the means to flee and certainly the motivation to flee, because ultimately he was sentenced to life in prison. And quite honestly, why he didn't flee, and because he had $600 million cash in the bank, that he could have just stroked a check, moved the money overseas, and disappeared. But he didn't. I think ultimately it just become too much for him, and he was burned out and just ready to, he told us, "Oh, I'm glad I was caught." No one's ever glad they're caught, but I do think he was just exhausted mentally and physically, and he didn't flee. So he was let out on parole, and quite honestly, the government was very upset about that. We saw the circus that ensued from that, and we repetitioned the court, and Judge Chin did revoke his bail, so he was sent to MCC prior to him pleading guilty.
Now, the people that worked for him, you mentioned this woman, I think you said her name was Annette?
Annette Bongiorno, yeah.
And what was the other guy who's...
Frankie Fiscali.
Okay, so Frank and Annette, how much did they know? How much did they gain from this?
They knew it all, and they gained a lot. Annette was hired, I think, in 1967, sometime around there. And she eventually, like I said, she eventually came to run that side of the Ponzi scheme, and she was just a backdating fool. And for Annette, fortunately for us, she kept everything, and she had a very distinct way of writing and keeping notes, so you knew if this was on a legal pad and pencil, it was Annette. And she would have to do it because she would make so many mistakes. When you're backdating and everything, you're recreating records from the 1990s for a trade in 2006. You've got to keep all these records and say, okay, what did I do? Because you can't go to Bloomberg because that's not what you did. You made up the trade. So she kept it all. Now, what she got out of it was a lot. She had her own investment account at Madoff, and she oversaw her own investment account. in which she could backdate trades and whatnot. And to give an idea of what she got out of it is, she put in less than $1 million into this account over the years, pulled out $16 million in cash from the account, and still had a balance of $54 million when the fraud was discovered.
Well, that's some good investing, yeah.
Well, I could be a great investor if I could go back in time and, make up my own trades, which is what she did.
Wow.
And Frank, ironically, Annette used to babysit Frank DePascali. They were both from Howard Beach in Queens. And she gets Frank a job and starts out very low level. He rises to become Bernie's right-hand man. He manages the other side of the business. And he is more intimately involved with Bernie and really running the scheme. Annette would do these bogus backdating trades. Frank really ran the office. And Frank, likewise, he had a big house in New Jersey that he built. He had a large boat down in Florida, and he lived very well. And he barely graduated high school. Same with Annette.
Well, wasn't that suspicious in itself then? As weren't other employees wondering how these two could be so successful and have these high-powered driving positions?
Well, all the other employees were taken care of very well, too. Jody Krupe, who became Frank's right-hand person and was grooming to take over, she was paid very, very well. Other people, payroll clerk, Eric Lipkin, he was paid hundreds of thousands of dollars to do the payroll. His father was one of the first employees. Both of them ended up pleading guilty. So everybody was involved. Not everybody. A lot of them were involved to some extent or another. And a lot of the frustrating part of the investigation was they would tell us, I don't know what a Ponzi scheme is. I didn't know it was a Ponzi scheme. And then you'd follow up and you'd say, yeah, but you knew all these trades were fictitious. And they'd say, oh, yeah, no, we knew the trades weren't real, but we didn't know it was a Ponzi scheme. Well, the securities fraud law doesn't even mention Ponzi scheme. It just mentions securities fraud. And if a trade is fictitious, well, that's a violation. And they, in their mind, they thought the fact that they didn't know it was a Ponzi scheme let them off the hook. It was really a bizarre investigation.
All right, so we've talked about all of these, people that were involved and what they knew. Let's talk a little bit about the sons, because that's what's really fascinating. Of course, I watched the miniseries, and the miniseries makes it sound like his sons were trying to get involved, wanted to be involved because they wanted to be a part of the successful part of his business, but they knew nothing about it.
No,
what's the official take on that?
Yeah, no, that's really not. That wasn't very accurate. That was kind of where I differed from the miniseries. It was overall pretty good, but that part, the sons were heavily involved in market-making business, the so-called legitimate side. But they also were instrumental in setting up the what's called the hot site, the disaster recovery site, in case something happened in New York. They were instrumental in setting up the London office. And if you're setting up those businesses, okay, if you're involved in the London office, you can see that London is a sham, that London really has no reason to exist. There's no way it can sustain the staff it had. It did not do that type of volume of business. And if you're setting up the hot site, okay, they set up a mirror server, okay, computer server in Queens in case of a disaster. Well, you see that machine isn't connected to anything. So the so-called, and the sons were involved in setting that up. So the computer, both in New York and Queens, that's supposedly executing all these trades, it's not connected to anything. It's like
what should it be connected to? Like
The internet. It should be.
It's not connected to the internet. I thought you meant like some type of trading entity, like NASDAQ or something. It's not even connected to the internet.
It should have a VPN over the NASDAQ or the internet so that it could execute trade. The only thing it was connected to was a printer. So basically, it was a big print server. I mean, it's like having a telephone that's not plugged into the wall. And this Andy Madoff was instrumental in setting up that hot site. And also they had fake investment statements from their own personal accounts. So they would have one statement saying July of '99 that showed one position, and then they had another fake statement in July of '99 for the same account showing a totally different position. So because that suited their needs at the time, they're applying for loans and whatnot. And those were in their own personal offices. So to say they didn't know something was amiss is problematic at best for them. Additionally, because we had extensive testimony that Mark, Andrew, and Bernie's brother Peter were always on the trading floor upstairs on the market-making business. And they knew exactly what was going on in that business. And if you know that, and we know that they gave out bonuses to the traders at the end of the year, and that bonus was based on basically their volume of business, there is no way that business was sustainable. Because Peter, Andrew, and Mark in the last year or two, they were making $33 million just themselves in salary and bonus, and that was almost.
Are you saying 11 million each or 33 million each?
No, 33 million total between the three of them. But their revenue from trading was only like 50 million. So how do you justify paying all these other traders rent and all this other stuff? And they would say, well, my father never told us what the income side was. Well, you didn't have to know. You could back into that number very easily. I mean, quite honestly, within a week, I had figured out that mathematically this didn't make sense. And I'm not saying that because I'm a genius. It didn't add up.
Yeah, so even if they can say they didn't know, there is no question in anybody's mind that they should have known, they should have asked, because things didn't look good, didn't smell right, and it was just a question of they didn't want to know, they didn't want to ask.
Exactly. Call it what you want. Conscious avoidance, willful blindness. They definitely should have known, because what was making up the difference to fund it was cash coming in from the investment advisory business, the Ponzi business. And there were huge cash influxes to make it work. So,
but they were never charged.
No, they both died before they could be charged. One killed himself, and the other died. Mark Madoff killed himself on the 2-year anniversary of his father's arrest. He could never get over it. And Andy Madoff died of cancer, I think leukemia, a couple of years ago.
Were any family members, was Peter charged too? Tell us what happened to all the other people. How many people in all, in addition to Bernie Madoff, were charged, and what kind of time did they get?
Peter Madoff pled guilty, and he was sentenced to 10 years. Frank DePascali ended up cooperating and was a fantastic cooperator. He was looking at a lot of time, but he died of cancer recently, so he was never sentenced. Then, quite honestly, I lost count. I think about 8 others pled guilty. 8 or 9 others pled guilty. 5 went to trial. All were convicted. Annette Bongiorno, Dan Bonventry, who was the CFO, Jody Krupe, who I mentioned was DePascali's right-hand person, and then 2 computer programmers, Perez and I can't think of O'Hara, were convicted. and they got very light sentences. Bonventry got 10 years, and then Bongiorno got 6, and the computer programmers got very light sentences, and I think Krupe got 6 or 5 years, and those were very disappointing, those sentences.
And why were they disappointing to you? What did they do that you felt deserved more time?
Well, Bongiorno, profited for years, for decades, literally, from running this scam, knowing she was backdating all this stuff. And I'm not talking like backdating a day or two. I'm talking backdating a trade for Dan Bonventry, who was also convicted, a trade in 2006, maybe 2003, I forget. But saying that the trade happened in 1990. So we're talking 16 years backdating a trade. And that wasn't unusual. That was probably the longest backdating we saw. But so we're not talking like a day or two. We are talking about a year's worth of trades that she would do in 1 month and in October, and go back to January and redo them, or go back a prior month, and talking billions and billions of dollars of false trades that she did over the years that not only benefited certain investors, but benefited herself. For instance, when the market crashed in 2008, which really is what led to Bernie's downfall, a month after the crash, she goes back and shorts the S&P 500. Well, wow, you just made yourself a whole lot of money. But for some reason, the judge was not compelled by that, and it was very, very disappointing.
Now, one of the things that you've already told us that was different with this case was that you used the actual site as your almost office space, as the crime scene, and you worked out of that. That was something that normally isn't done, right?
No, and we took it so far as we ended up getting FBI computers installed so we could access FBI Net, so we wouldn't have to waste time going downtown to type 302s and upload them into the files, and we could research the files. And that was pretty groundbreaking, and they had to come up and do a security evaluation. We had to pull the hard drives out every night and put them in a safe. So you almost had like your own mini resident agency. Yeah, that's exactly what we did. We created an RA up there, and by stroke of luck, the entire team, everybody lived in the city, so it was very efficient for us to work there, get all our stuff done. We weren't wasting time going back and forth between the office. Now, we'd have to go downtown to the Southern District and do proffers and interviews and draft complaints and things like that. But it really was, which is not always the case with the FBI, the most efficient way of doing it.
Now, how many times did you actually get to sit down and talk with Bernie? And what did you think of him as a person?
Just that one time. We transported him down for the proffer. If you didn't know, you'd just think he was a nice elderly Jewish grandfather type. But he was a pathological liar. And in my opinion, he was a sociopath. And typically, we associate that with serial murderers and rapists. This guy was a financial sociopath. And he truly believed his own press clippings, and he just thought he kind of made a wrong turn and the market went south on him, and he kind of had bad luck. But
so he was cheating people for years, scheming, scamming, cheating, robbing them for years. But he really, in his mind, it was just a financial, downfall caused by the market crash.
Yeah, in many ways, you talk about how ungrateful people were because you made them a lot of money. It's like, well, yeah, you made a lot of money because you stole it. I think the perfect example of how fictitious it was was when I'd be debriefing Frank DePascali, he would tell me, well, we would execute this trade and it would show a profit of $1 million, let's say. And for evidentiary purposes, I would say, and Frank, that trade was fictitious. And he would say, yes. And I would always have to ask him that question just to make sure that. So finally, Frank gets tired of me asking this question. He says, look, Keith, if a trade was ever real, I'll let you know. But when I tell you I did a trade, it was fictitious.
Just assume it was fictitious.
Yeah. If it's real, I'll let you know, but that's not going to happen.
Well, when you were saying that Bernie Madoff had this anger to these people who he had made all this money for, let's take a little bit of time to talk about the victims. Did you have a chance to talk to some of the major victims and tell me what you thought about them and just the emotional toll that they went through and that you went through with them, listening to their stories? Well,
it kind of ran the gamut, quite honestly. I remember I actually we didn't interview too many victims, quite honestly, because we didn't need to. We only had to find one victim for each count, and there's a whole victim assistance unit now. But there was one family that I felt really bad for. Her husband, they put their life savings in there, but it also helped pay their grandkids' colleges and things like that. And now they were destitute and living with their family. And their one grandkid said to the grandmother, "Don't worry, Grandma. You took care of us all these years. I'm out of college. I'm going to take care of you now." And that was very touching. And then I ran the other gamut of calling up some woman in Palm Beach and asking for her, and the housekeeper said, well, the lady of the house is up in her New York apartment, and I called her and asked her if she could help, and the only thing she wanted to know was when she was getting her money back, and she refused to cooperate. So quite honestly, I didn't have too much sympathy for her, especially since she had a Park Avenue apartment and a place down in Palm Beach. And as an aside, though, ultimately, most victims will be compensated at least 80% of what they lost, possibly close to 100% by the time it's all said and done.
And talk about how rare that is, because that is unbelievable to me.
Yeah, it is unbelievable, because at the time, we were talking about 2-3 cents on the dollar. And these people may get, at worst, 80% of restitution, which you could get that's a 20% loss in the stock market. That's just a market correction or a bear market. We never thought we'd get there. And like I said, between Pick Hour and then another investor, Carl Shapiro, he ended up writing a check, a forfeiture check of $625 million. So right there, you have almost $8 billion between two investors. We recovered another $225 million from Norman Levy, and quite honestly, from his estate, because he was dead. And quite honestly, had we waited on that, we would have recovered a lot more. But the receiver was, I think, looking for a quick win, and the estate was willing to settle for that amount. But we could have gotten a lot more out of that estate.
So let's be clear. You're talking about restitution of their initial investment. So if somebody had invested with Bernie and they thought they had made $10 million, they invested $1 million and had made $10 million, they got back the $1 million, not the $10 million.
Right. Yeah, they're only entitled. So the overall total loss to investors, not fictitious losses, is between 17 and 18 billion. I think it's 17.5 billion. Now, a lot of investors aren't happy with that. They think they're entitled to their inflated profits or some variation of that, their initial investment plus a return based on treasury bills. And that's not how the law works. Like you said, all you're entitled to is your initial investment less any money you took out of it. So if you put in $1 million and you took out $200,000, you're entitled to $800,000. You're not entitled to the fictitious gains on that account. But a lot of people don't see it that way.
Yeah, when I was working economic crime, I think another thing that people had a hard time understanding is when the FBI was working on a criminal matter. I mean, if there was forfeiture, of course, we wanted to pursue that. But returning somebody's money, getting their money back, is not part of the criminal investigation. And so,
no.
they'd want to cooperate and talk and assist us because they think they're getting their money back. And we had to be very clear at the very beginning. I don't want you to cooperate with the thought that you're getting your money back, because that is not, the purpose of this investigation. It's to find justice and put somebody in jail for, doing something illegal, violating the law.
Yeah, that's a perfect point, because that lady that said, when am I getting my money? I said, ma'am, that's not what I'm here for, okay? I said, we have a victim assistance unit and things like that, but that's not our job. And ultimately, though, by cooperating with the criminal investigation, you're helping possibly trace funds or things like that and get convictions, which make it easier to obtain forfeiture, which will result, hopefully, in restitution to the victims. And with that, the Southern District had worked out an agreement with the receiver so that basically money forfeited to the government would be coordinated, and that got a little complicated, but would be coordinated with the receiver as a way to get money back to the victims. And so a lot of victims have already been compensated to some extent. The receiver has paid out several $1 billion of the, I think they've forfeited over or recovered over $10 billion to date, maybe more. And there are so many lawsuits out there. I mean, this case is the full Lawyer Employment Act for lawyers in New York City. Virtually every law firm in New York is either defending or suing somebody.
One of the things as you know, I'm now becoming a novelist. I'm writing crime fiction, and the second book that I'm writing right now is titled, the working title is Greedy Givers. And I think a lot of people would be surprised that in many cases, and I got to say this delicately, but sometimes the victim is guilty of greed as much as the subject.
Absolutely, and that's a great point. And you sound a little insensitive when you do it, but these people, they didn't know it was a Ponzi scheme, the regular investors. But at the same time, they had to know something wasn't right. There was never a down quarter. There were only a few down months. You could barely read your statement to figure out what your positions were. There was no website. You couldn't log on to see your account. Everything was done by mail on an old dot matrix printer. So basically, they didn't want to know how Bernie did it. They just wanted their 12, 17% return. They used to call it Bernie bonds because the rate of return was so predictable.
What was what would they have gotten if they had invested with a legitimate financial firm? What was the difference between the return on investment they were getting from Bernie and what they would have gotten from somebody else?
For the smaller investors, you're probably talking, on average, long term, spread it out over years, probably a 10% difference, I would say. Maybe an 8 to 10% difference, which doesn't sound like a lot, but, the rule of compounding, you're talking a 7-year difference in doubling your money. The bigger investors, they got 45%, 30%, so that was just off the chart.
Yeah, that was definitely a, don't ask any questions, just pocket the money deal. Yeah.
A lot of people thought that the way Bernie was making his money was he was front-running stocks. So basically from the market-making business. So someone would come in and say, I want to sell Intel at 25. you come in and you make that trade before the rest of the market does, and you sell Intel at 25 and an eighth. I'm dating myself, 25 and 5 cents or something. And now you'd make a little money on that front running, which is illegal, but it's not that bad. Okay, everybody kind of does it on Wall Street, as a theory. And they thought, that's how he was doing it, but it was much worse than that, obviously.
Wow. All right, so we talked about something that was different was you working out of the crime scene. Were there any other things that you did differently with this particular case, this economic, crime case that was unique and that, was different than what normally would be done?
No, I mean, that was a pretty big difference right there, and actually caused some resentment downtown. I mean, people thought we were goofing off up there, and I mean, we worked very hard. I mean, we had a good time with the case. I mean, we had a lot of laughs, actually, which sounds kind of cold-hearted, but when you're working 12, 14-hour days, you have to get a couple of laughs in. But
when you told me that most of the people lived, in New York in the city, I knew that you had to be working 12 to 14 hours because a lot of times when you're close by, you spend more time at the office because you're not concerned about when you're going to get home.
You're not worried about getting through the tunnel and beating tunnel traffic and everything. And we were enjoying. I mean, it was hard work, but it was, so interesting. And when we first started, it was kind of a blessing that I didn't have any help in the beginning because it forced me to go through virtually every box in the office, and I would see things, and 9 out of 10 times I wouldn't even know what they meant. But I would also see things and say, I don't know what this is, but I have a feeling it's important. And I would either put it aside or I'd make a mental note saying, I got to come back to this. And time after time, you go back and say, that's what that was, or I know where that document is. And I remember one of my last days there before I retired, I was looking at a set of documents which I had put aside, and I hadn't looked at in almost 2 years. And I looked at it and I said, oh, my God, that's that trade. This is what they were talking about.
Now, I can hear the excitement in your voice, and for me it was the same thing. I loved, sometimes going through boxes of documents was absolutely boring, but sometimes, it was worth it because of the time when you found that document that you needed. It's almost like panning for gold. Okay, it's monotonous. You're panning for gold, and then finally you find that nugget, and it's magical.
Yeah, I mean, we had this one box. We called it the happy box because you'd go through it, and it didn't mean anything. And then I went through it 1 week, and I found this huge backdated trade that we're talking about. Well, then a couple of weeks later, I go through the box again, and I realize there's another backdated, and we keep trying, and it's just not clicking. And we kept calling it the happy box because it kept churning out all this great evidence, and it was written in the defendant's own handwriting, basically laying out the crime, and then documented with date stamps from Bloomberg. So it was open and shut evidence, but it was amazing. Like, I'd been through that box a dozen times, and then it was the gift that kept on giving.
There you go. All right, so it sounds like you retired before the case was finalized or finally resolved.
Oh, yeah, it kept going on for years after I left.
So why did you retire at that time?
I had been in 27 years. It was time, that's all. I mean, I love being an FBI agent. I wouldn't trade it for anything in the world. But 27 years is a long time.
Yeah, I would love to talk to you, in a few months about some of your other cases, because I actually was told by another retired agent to interview you, but not about the Madoff case. I didn't find out that you were the case agent for the Madoff case after we began talking. What was that other case that I actually was told to interview you about? That was the drug case.
It was either roller derby or the Mexican mafia case. I don't remember.
Roller derby.
Roller derby.
Yeah, give us one or two sentences about roller derby, and I promise everyone who will be excited about this case that maybe in a few months I'll, get back in touch with you and we'll talk about that. But give us a little tease about roller derby.
Yeah, roller derby was an Asian heroin case where we ended up seizing about 440 pounds of heroin that was being shipped very cleverly via Korea, but was originating in the Golden Triangle and being coordinated out of Thailand. And the reason they were shipping it through Korea is not a known drug trafficking country, so customs is not attuned to shipments coming in from Korea to look for drugs. So it was a great way, and even though we seized over 400 pounds of heroin, prior to that, hundreds and thousands of pounds of heroin had come in that way into the United States. So it was a good case.
Fascinating. Can we get together in a few months and talk about that too?
You know where I am. You know how to get me.
All right. Well, tell everybody what you're doing now.
Oh, now I have been teaching some criminal justice down at ASU, Arizona State University. Right now I am head of internal audit and director of security for a group of companies which include PXG golf clubs and some other related entities.
All right. So do you have any closing words that you'd like to say about your career?
Just what I said earlier, being an FBI agent is a privilege and the greatest job you could ever have. I wouldn't trade my 27 years for anything. I tell people it's better than being a pro ball player.
And that's the end of the interview. As always, back at jerrywilliams.com, you'll find photos of Keith and links to several articles and videos about the Bernie Madoff case. If you enjoyed the episode, I hope you share it with your friends and family and make it easy for you. At the bottom of the episode show notes, I have all the social media share buttons. I am proud to say that my crime recommendation for this week is Pay to Play, my novel about a female FBI agent investigating corruption in the Philadelphia strip club industry. Now, why did I choose this concept? Well, strip clubs can be magnets for criminal behavior. Complex investigations linking organized crime, public corruption, tax fraud, and overbilling schemes to adult entertainment venues have been initiated by the FBI in cities throughout the United States, including Philadelphia. And on my website, you can get access to a list that shows you a full variety of the type of cases that the FBI has investigated involving strip clubs. So once I realized this and started researching several of these cases, I thought to myself, this is a concept that I could develop a story about corruption, temptation, and redemption. Pay to Play is a character-driven procedural thriller, and it's told from the points of view of the female FBI agent, Carrie Wheeler, Carrie's male partner, and the corrupt licensing and inspection official they're investigating. Now, best-selling author Joseph Wambaugh, known as the father of police procedurals, once said, "The best crime novels are not about how cops work on cases, but how cases work on cops." And Pay to Play follows Wambaugh's guidance. I really want to be a full-time author. That's what I'm devoting my third career to. And what I want to do is to give a different look into the FBI. There are a lot of people writing books about the FBI, but the majority of them feature serial killers and terrorism. Well, I love greed, corruption, and fraud, and so that's what I want to do. Look at actual cases and write compelling, entertaining, and authentic novels featuring the FBI. So I hope you go out and purchase Pay to Play. I think you'll enjoy it. This episode was sponsored by FBIRetired.com, the only online directory made available to the general public featuring retired FBI agents and analysts interested in showcasing their skills to secure business opportunities. I want to thank you for listening, and I hope you come back again next week for another episode of FBI Retired Case File Review with Jerry Williams. Thank you.